sentiments have remained generally weak this week so far. The United States equities reversed earlier gains, as Microsoft led a sell-off towards the end of the session, which saw the Dow Jones close 58.9 points lower, and the S&P 500 was down 5.5 points. Asian equities are mixed, with the Nikkei flat, the Hong Kong HSI rising over 180 points, and Singapore Straits Times down 17 points overnight. The dollar and yen continue to lose upside momentum against other major currencies, but there is no confirmation of topping in these two safe haven currencies yet. The New Zealand dollar is the weaker currency after poor retail sales data. The UK will be the major focus in the European session today, with the Bank of England inflation report and employment data featured. The US will release retail sales and Federal Open Market Committee minutes. Market minds are clearly on Friday's meeting between the United States President Obama and the Republican and Democratic leaders of Congress on the issue of the fiscal cliff. Before that, Dallas Fed official warned that the Fed is not the safety net in case Congress fails to reach agreements on the fiscal cliff issue. He urged that fiscal authorities get their act together so we wouldn't be dependent on monetary policy, as there is a limit on what the Fed can do. And he grieved that, the more we do at the Fed, the more excuses politicians have to do nothing. Also, Fisher warned that the Fed will not continue down the road of an infinite expansion of monetary policy. Fed Vice Chairman Yellen said that the highly accommodative policy path generates a faster reduction in unemployment than in the baseline. And she advocated that the optimal policy to implement the balanced approach, minimizing deviations from inflation and unemployment target, involves keeping the federal funds rate close to zero until early 2016. Meanwhile, she also expressed her strong support to the idea to eliminate the calendar date entirely and replace it with guidance on the economic conditions. That is, the Fed could define a zone of combinations of the unemployment rate and inflation, and within which the Fed will hold rates near zero. In Europe, European Central Bank Vice President Constantio said he's against any kind of two-tier system in the banking supervision in Eurozone. He said the ECB wants to retain some powers and right of initiative in the center of the single supervisory mechanism. Finance Minister Moscovici called for a fully unified supervisory system, and he believed that enactment would be reached by the end of the year. Italian Finance Minister Grilli said that no bank will be left out of this framework, all are part of it, and the ECB sets the rule and can intervene whenever. Looking ahead, the UK will be the centre of focus in today's European session. Sterling has been supported against the euro on recent economic data, including Q3 GDP as well as yesterday's strong inflation data. The Bank of England's quarterly inflation will be a key guidance to how likely the central bank would be to expand its asset purchase program. Employment data will also be watched, where claimant count is expected to drop 2,500 in October, and the unemployment rate is expected to rise to 8% in September. Also to be released are Swiss ZEW and Eurozone industrial production. From the US, PPI, retail sales and business inventories will be released, followed by the Federal Open Market Committee minutes.